Good morning, everyone. Welcome to the Commodity Weekly Roundup with me, Ravindra Rao from Kotak Securities. Commodities have edged up last week as supply risks, inflation hedge demand, and China's stimulus hopes countered gains in US dollar index and volatility in equity markets. The US dollar came back from the previous week's losses, getting boosted by the risk off sentiment. The DXY index rallied 0.6% to close the week at 96.03. It is currently trading sideways between 96.50 to 95.50. Precious metals have seen a good up move in the recent few sessions, and MCX Gold April contract gained almost 2.5% last week as gains in international market were coupled with Indian rupees depreciation against the US dollar. COMEX Gold gained 1.9% and tested November highs amid safe haven buying on back of tensions relating to Russia, rising inflationary pressures, and mixed economic numbers. Higher bond yields amid monetary tightening expectation has, however, limited the upside. MCX Silver March contract rose 3.5% last week, whereas COMEX Silver gained around 4%. Gold is considered a safe haven asset and tends to gain amid the increased geopolitical situation. Focus currently is on development relating to Russia-Ukraine standoff. Market players are worried that Russia's attack on Ukraine may cause US and other Western countries to retaliate, resulting in a wider spread. Also, gold's appeal as an inflation hedge has been high, with data from major economies showing continuing price pressures. On the technical front, dollar gold spot has taken out the important resistances near 1835 and $1850 and is currently trading near the next resistance of 1877. If it sustains above 1877, we expect prices to go higher to dollar 1910 1916. And on the MCX, 50,000 250 350 is the immediate resistance. If that is taken out, the prices might go higher above 51,000 levels. So technically, any dip is a buying opportunity, and on the lower side now support is at 1835, so that should be held on a closing basis. In case of silver, prices are currently trading near the resistance. If we talk about dollar spot silver, it is currently near the resistance of $24, and above that the next resistance is near 24.65 to 24.80, which was the recent high. So there is a possibility that the bulls might stretch prices till the recent highs and the 252-day DMA near 24.65. On the lower side, immediate support is near 23.40 and 52-day DMA support is near $23.19. So that should be held if the bulls have to take the prices higher. In case of MCX silver, possibility of it reaching towards 65,500 is high. It is currently near the resistance of 64,200. If that is taken out, we might see prices moving till 65,500. 52-day MA support is near 62,450. Now that should be held, and if that is not taken out, then the prices might stay supported. Coming to energies, crude oil traded lower for most part of the week last week, but a sharp rally of 3% on Friday helped it end higher for yet another week, while prices hit fresh 2014 highs. Crude has been rising on tighter global market as demand growth has outpaced supply growth leading to lower stocks. Amid tighter global market, geopolitical risks are increasing in key producing regions, and this has fueled worries of supply shocks and has pushed prices higher. Um, Increased tensions could further tighten supply, aggravating inflationary concerns. The continuing rally shows strong bullish sentiment. However, challenges are increasing. Supply is set to improve with US and OPEC raising output and easing recent supply disruptions. Demand outlook remains upbeat but challenged by persisting virus concerns and uneven recovery. Equities have also turned volatile amid the prospect of aggressive monetary tightening. The recent leg of rally has largely been on expectation that Russia may invade Ukraine soon, resulting in a wider conflict which may impact supply. However, if there is no immediate action by Russia or if more diplomatic efforts are made to resolve the issue, market players may reduce the risk premium with equal ease. Overall risks are increasing and fresh buying is advisable only on corrective dips. On the technical front, NYMEX crude has been consistently trading above $90 and is currently at $95. Support band is near $90 to $88. Until that holds, the bias remains higher. Below that, that is below $88, correction might extend. But the prices are slightly overstretched and they are into the overbought zone. So advice would be to wait for a dip to enter into long positions or wait for a breakdown to get into short positions. In case of natural gas, prices have taken support last week near 290, 292 on the MCX and are trading higher. Yesterday it traded higher by almost 6%. Uh, until 290 holds on a closing basis, there is a possibility it might test 320, 322 levels on the higher side. And if 320 22 is taken out on a closing basis, the next upside target would be around 330 to 340. So until 290 holds, the short-term bullishness might continue in natural gas. Excuse me. Finally, coming to base metals on the LME closed higher last week on expectation of more stimulus measures from China after NDRC vote to step up infrastructure spending to boost the struggling economy. LME copper has jumped to 4-month high at 10,289 ton last week as total available inventory officially held by LME, COMEX and SHIFI approached critically low levels that are scarcely enough to cover 3 days of global consumption. LME stocks have been consistently declining with 15% drawdown so far this year and cancelled warrants at the highest since November 2021. Aluminum prices also surged to $3,333 per ton, highest since July 2008 on additional supply constraints. As China enforced most stringent curbs in aluminum hub of Bay City to fight rising local COVID-19 infections. Now, this has affected production of alumina, a raw material used to make aluminium. This week, aluminum prices may trend higher as tensions continue to escalate with increased threat of Russian military action. So overall, base metals are looking positive. So any corrective dip might attract a buying opportunity. On the technical front, copper is looking positive after an inverse head and shoulder break last week. Copper tested the targets near 788 on the MCX, and after that it has corrected. It has once again reached the breakout support near 760, and until 758 holds, the price might once again try to test the higher levels near 780 790 zone. In case of aluminium, although the setup is positive on the technical front, there is a evening star formation, which is a bearish reversal formation on the MCX. However, it has not yet confirmed. The confirmation will come only below a close of 250.80, and if that happens, the correction might extend. If not, then we expect the price to trade between 250 to 265, 66, which was the recent high. And if 266 is taken out on a closing basis, it might reach to new highs. So one has to wait for a confirmation of the evening star to go short in aluminium. So focus this week will be on FOMC minutes, which will reflect upon Fed's monetary policy stance and may impact US dollar as well as general risk sentiment. PPI data will reflect on inflation situation, while US economic numbers may reflect on the economic health. Well, that's all from this edition. Good luck and trade safe.